out for the bulls, and Bitcoin needs to bounce ASAP or bulls are in big trouble, and you're going to have to pack it up soon if they don't get this market running. And I'll show you why in just a moment. But first, let's look over here at the crypto bubbles chart. You can see on the daily, a couple of coins are still red. A few of them are starting to bounce. Let's see what the hourly looks like. On the hourly over here, most of them are starting to turn green. So the small bounce is being initiated. And I have some compelling evidence that suggests that maybe it's not as bad as what we think, and there could potentially be some sort of relief in the days to come. So without further ado, let's get straight into it. And I wanted to start off with this over here by sentiment. Sentiment essentially tracks all of the market sentiment across social media platforms. And you can see it's been really bad. If you're looking at Twitter over the weekend, it's definitely doomsday scenarios all over again. You have some bizarrely high levels of negative crypto sentiment, which has appeared over the course of this weekend, particularly on Twitter. And they say it's hard to gauge what may be contributing to one of the highest levels of FUD sentiment has ever recorded. These guys have been around for a while. So you know how it is, right? You're meant to be greedy while others are fearful, and extremely fearful while others are greedy. And I must be honest with you, it does seem quite scary out there. There's a lot that's going on with Silvergate, as well as the Mt. Gox Shanghai upgrade. There's a whole lot that's going on within the market. But here you can look at the charts where they essentially track bullish versus bearish word comparisons on different social networks. And this has been the results. Look at these massive spikes over here in negative sentiment. So here you have Telegram. Pretty much interest is falling off of a cliff. Reddit, interest is falling off of a cliff. Twitter, sudden massive spike over there in sentiment within the market. So engagement around crypto, but this is negative engagement. So something to keep an eye out on. And the reason why is a couple of things. Number one, the SEC staff believe that Binance US is operating an unregistered securities exchange. So big news that's coming out over there. But is that really a revelation? Well, if you look over here as well, Binance US is a fake exchange, says Wall Street Journal. So they publish an article out about that. But is this really a revelation? I mean, 𝗕𝗏𝗄𝗧 is obviously against all crypto. He said that they pretty much all securities. So surprise, if Binance is obviously listing those tokens over there, as well as every other exchange that's out there, this is not really new information. But one thing that is real that's currently going on is Silvergate's exchange network. The volume transfers have been absolutely falling off of a cliff. So you can see 2019, 2020, 2020, 2021, going through the different quarters over here, steady and gradual increase. And then suddenly in Q2 of 2021, it started to fall off of a cliff. And then here you have 2022, volume is falling rapidly. And he says over here that it looks like people can't move money around anymore, or it's too hard to do it during weekends. Silvergate was open 24/7 to move cash around. Either way, this price action is atypical. So this is something that is quite scary. MicroStrategy were obviously called out with regards to their ties to Silvergate. So they made this is Michael Saylor's MicroStrategy. They made a statement over here. He says, we have a loan from Silvergate that's not due until Q1 of 2025. There are market concerns regarding Silvergate's financial condition. For anyone wondering, the loan wouldn't accelerate because of Silvergate's insolvency or bankruptcy. Our BTC collateral isn't custodied with Silvergate, and we have no other financial relationship with Silvergate. So they're basically clearing the air over there and saying that this is FUD. Don't worry too much about it. It's not a big deal. But what happens when you look at the price? Well, there's Silvergate over here. Let's put on a monthly chart so you can see a little bit closer, but pretty much making fresh new lows. That is shocking. That is terrible. That is very bad. Hardly any relief over here. I mean, it's down 97.43%. Of course, it does have a certain level of correlation to the crypto markets in that it set in its major top in November of 2021. It had its relief rally in March of 2022 when Bitcoin hit 47, 48K on its relief bounce. And then we had another one over here in August where crypto had yet another relief rally. But the difference is over here, you can see the clear divergence, which means that Silvergate is definitely in big, big trouble because crypto bounced over here. And this is where the chart deviates away and Silvergate continues on towards the downside over there. So that's something to watch. Then the next thing I wanted to dive into is what's actually going on with Silvergate. Why are they imploding? And this is a long thread, so bear with me, but it's really important if you start to see the way this all ties in and the risk that this could create for crypto. I think it's something you need to know as a viewer. It's very, very important. So let's have a look over here. They say, why did Silvergate Bank just implode? I realize some people may be wondering what the F just happened. So here's an unannotated version or short version. The story begins when Silvergate, a small regional bank, decided to go full crypto. A bunch of crypto companies use Silvergate to hold user deposits, stablecoin backing, etc., USD and cash. As it got more crypto customers, it grew, obviously. Silvergate went from being a small bank to a medium bank holding 15 billion in customer deposits. Since it had all this cash around, Silvergate executives decided to invest it in a very safe asset. By the way, these executives are not the smartest. Let me know in the comments if you know where this is going as well. And also give this video a like. I'd really, really appreciate it if you can give the video a like to get the algorithm going. So they decided to invest it in US Treasury bills, but you'll see where they went wrong in just a moment. Basically, they loaned the government of United States money in exchange for interest, plus a guarantee of getting it back in X amount of years, or they say N years over here. So example, how does this work? You put $100 into Silvergate's account. Silvergate will take your $100. Then they're going to buy $100 of T-bills at 1%. Now, the government will give the $1 for X amount of years that it's being held. And then you get the $100 plus that back at the end of those years. So depending on if it's a 3-month T-bill, 1-year bill, a 10-year, etc., this is where they went wrong. They went with too high a time frame. So unfortunately, Silvergate bought these treasury bills at a period of historically low interest rates. So maybe they were earning 1% interest, as in the example. They also bought long duration T-bills, say 10 years. He doesn't know the number exact, but it's low. And then he says, yeah, the problem is, as the Fed increases the interest rates as it has been doing, then people don't want the T-bills that only pay 1% anymore. Why would they? If they can go to the government, they can get fresh new T-bills that are paying higher, which is 4%. Remember, you can actually get up to freaking 6% at the moment, which is quite scary because that means that big hedge funds and things that are managing institutional money, they don't really have any major incentive to go into crypto right now because this is safe and as secure as anything. If you are going with the T-bills, it's absolutely guaranteed. The risk is extremely low, and that's quite a high return on investment for them, for big institutions, maybe not for us crypto degens, which means that a lot of them are going into those T-bills. So let's continue the story. This drives down the value of the 1-year T-bills if you have to sell it before the 10 years is up, possibly by a lot. Maybe $100 per 1% T-bill is now only going to be worth $90 on the bond market. Of course, if you don't have to sell it, then there's no harm, no foul, because in 10 years you get your money back anyways, plus you get the interest that they originally promised you. The problem is when you have to cash out sooner. And of course, if people want their money back, then they have no choice but to sell. So I'm not going to scroll down yet because if you're epileptic, you might want to look away with that. But Silvergate's problem was the FTX implosion. This is really what screwed them. It created a cascade effect, contagion spread throughout the markets. And you have all of a sudden people wanted their money back now. And they had to sell their 1% T-bills on the bond market. They got completely wrecked on the trade, losing $1 billion in a month. That was all of Silvergate's profits all the way back from 2015 evaporated, gone in one go. Epileptics, look away. Okay. Things got worse from here. Banks are special in that they are really selling, what they really are selling is confidence. The confidence that if you give these people your money, then you're going to get it back. This is why rumors about the solvency are so damaging to banks. And now Silvergate had a lot of rumors. They were able to stave off disaster by taking out special government loans meant originally to help poor people buy houses that didn't last for reasons, to be honest. And then he says, yeah, this is oversimplified. bit, but hopefully it is still illuminating for some people. If they had just bought, this is where they went wrong, guys. If they had just bought 3-month treasuries, they would be fine. But Silvergate is not run by smart people. And here you can go. I think there was something from 𝗕𝗏𝗍𝗍. So 𝗕𝗏𝗍𝗍 says Silvergate must be run by the biggest bunch of Muppets ever. They had 3-step process that they needed to follow. All they needed to do was take the US dollar deposits from crypto firms and pay no interest. Then they could buy 3-month treasury bonds yielding 4.78%. Then assume $10 billion of deposits were made. They could make $470 million a year. That's literally all they had to do. Obviously, because it's shorter term, 3 months, they would be able to basically realize those profits a lot sooner and provide the withdrawals back to the participants that were requesting them, as opposed to holding it for prolonged periods of time. And now basically there's a massive deviation and they basically screwed. So they messed up really bad. The problem for the broader crypto economy now, so this is the important part. I needed to give you guys a bit of context. Now you have context. This is important. The problem for the broader crypto economy, however, is that there were really only 2 banks of any size that were willing to deal with crypto companies, which was Silvergate and Signature Bank. Those are really the only 2, the main drivers of how these transactions work. So this is who Silvergate Exchange was essentially servicing. Big exchanges, right? FTX, Coinbase, Paxos, Crypto.com, Gemini, Kraken, Bitstamp, Circle, which obviously owns USDC. So there is a little bit of a problem over here. He says, as of the end of 2022, Silvergate's SEN was moving roughly $750 billion a year. And then you had Signature Bank, which was moving $1 trillion per year on these unapproved, probably illegal payment networks. 1.75 trillion is roughly 15% of global Visa payments network. That's just to give you a bit of perspective. So big numbers over here. So he says, suffice it to say, these unapproved payment networks became hotbeds for money laundering on a scale that the human race has not seen. And I mean ever. They dwarfed even Wirecard. And he says, yeah, you can read more if you want. So does it seem reasonable that 2 small or medium-sized American banks are doing 15% of the transaction volume Visa does in all countries and in all currencies? That is freaking huge, guys. You understand this? They're saying 2 banks are doing the volume, or were doing the volume, that 15% of what Visa, which is what most payment networks work with, across the entire world in every single currency. And then he says, but what if I told you they are only doing 0.7% of all bank transfers in the world across every bank in every country? Because I can assure you it does not seem reasonable to banking regulators in the EU and the United States, especially when a measurable volume of those transfers seem to end up in Iran and North Korea. So he's insinuating a little bit of dodgy business here and money laundering, essentially, okay, through these banks, which means the US and the EU are probably going to come after the last bank that's still standing for crypto, which is Signature Bank. So these are where the problems come in. This is why these stablecoin wars are starting to unfold, right? If you go and have a look at the development within the stablecoin industry now, they're moving forward very, very quickly. And hopefully before all of this implodes, we do have some sort of a solution over there to have almost like our own banking system within crypto that's not at risk from the regulators. So he says, yeah, and especially when Silvergate's anti-money laundering screening was so piss poor that they let SBF number one, use an Alameda research bank account for FTX. This is a major no in banking. And then number 2, steal $9 billion from his customers. And then you have over here, if you look at Signature Bank's anti-money laundering, they were also piss poor, and they ended up allowing Binance to bank with them under a shell company, Key Vision Development, which was so shady that the Seychelles kicked them off the island. So I mean, if you understand how this works with setting up shore bank accounts, you know that that is a real low blow. If you get kicked off of the Seychelles, pretty bad. Anyway, either way, with the collapse of Silvergate, $750 billion per year in USD transfers between crypto exchanges just totally evaporated. And so now it's all on Signature Bank. Signature Bank is only bigger than Silvergate, is the only one that's bigger, than Silvergate. And it's the only game that's left in town. So, which is why, if you're into crypto, you should be very concerned about what's happening at this exchange, which is Signature Bank. For instance, the founder of that bank has now just stepped down. So a lot of alarming things over here. I mean, you can read the rest over here if you want, but there's ties to Tether, which is why if you look over here, okay, it seems to have gone away now, but recently on Twitter, Tether has also been trending. So there is a lot of FUD that's going on within the markets at the moment. But I wanted to come to one very important silver lining for you guys. This could be a silver lining, but we need price to hold up for a little bit longer. And the silver lining is this. Jason Pizzino over here, he says, Bitcoin news cycle, bear bull market reactions, book market, and retweet it. So if you look at this closely, essentially what I'm trying to outline to you over here is there's two ways that you can view the markets. Number one, if the market is going, so you've heard the saying, right? If there's good news, but the market continues to go down, under good news, constant release of fresh press of exciting new things within crypto, regulators are happy with crypto, but crypto continues to sell off, you're probably in a bear market. If in the face of terrible bad news, the crypto market continues to go up, then you're probably in the start of a bull market. And he shows over here, look at Luna collapse, look at the sell-off from that. That's big, of course, Luna UST collapse. Then you had the interest rate hike fears. Look at the big sell-off over here. FTX collapse, look at the sell-off over here. And then Silvergate collapse, look at the sell-off over here. What am I trying to say? Well, if you look at the magnitude of each sell-off, it's becoming less and less severe. Okay, Luna. Then you had the interest rate hike fears, was actually a little bit more. FTX collapse, huge. So many people lost money, massive, massive. One of the biggest crypto scandals ever. Yes, the market made fresh new lows, but the magnitude of the sell-off in relation to these ones over here was not as severe. If this candle doesn't go all the way down and it makes, and this is basically the net result of the Silvergate collapse, then that would actually be a net positive for crypto, because that means that you're having bad news and the market is not selling off of that bad news, which means you're in a real transitionary phase and potentially the market could start going up. So that is important to keep an eye out on. Now, we're bombarded with a lot of key events. If none of this stuff can take the market down, I think that you should really start to pay attention to look for upside potential. So this week's critical. Key events, we have Fed Chair Powell speaks on Tuesday and on Wednesday. We have JOLTS job data on Wednesday. Then we have Fed beige book on Wednesday. Fed bar speaks on Thursday. February job reports on Friday. Final week of Q4 earnings is also coming out. So mark off on your calendar. Type in cryptocraft.com/calendar. This is the Forex calendar over here. Click on, if you go to crypto, it should say crypto around here on this end. And then you can look over here. You can mark off the dates according to your local time. I'm currently, I don't know which time zone I'm on. So just make sure that you're on the right time zone over here and then mark that off. Expect a volatile week ahead. Now, based on what Powell said last time, you have here from Allianz, he says Powell speaks next week. His last speeches had a focus on disinflation and economy slowing down. CPI, PPI, PCE, and recent economic data has all come in hot, negating those speeches. It should be an interesting week next week. Again, I'll say in the face of bad news and hot data, if the market doesn't go down as much, the magnitude is decreasing on each and every sell-off, that is a good positive sign. It means that we're establishing a potential consolidatory phase. We're moving into a sideways range, and that gives sets up the potential for the market to fully reverse. So he says, yeah, they're losing control, and exactly what I said in December is happening. The Fed will claim victory, then inflation will reaccelerate, and then they are stuck. So he's expecting inflation to pick back up again. TED Talks over here has shown some research from ING Economics. ING Economics have been pretty spot on. They've been contrary in the last couple of months, but pretty spot on. And what they're saying their base case is the Fed will hike by 25 basis points in March, May, and June over the next 3 months. And then they're going to cut rates by December. By 50 points in December, meaning that they're going to pretty much cut rates completely. So here you have a 75.3% probability of a 25 basis point rate hike. Mt. Gox creditors are going to start receiving Bitcoin payouts from March the 10th. There has been rumors that this is going to be pushed all the way forward towards September. So watch the story. Let's see. I mean, once the first one comes out, the first payout, then we can say it has officially begun and those coins are going to hit the market. So a lot of the selling at the moment could be because of all of these fears, right? You have everything I've just outlined, plus this Mt. Gox, plus Shanghai, which is going to release a whole lot of coins. The monthly chart, however, still looks healthy. You would expect this as a normal consolidation within this region, allowing both the stochastic RSI to pick on up towards the upside, build some momentum, as well as the MACD over here to also change its histogram and get a cross over here. So to get a positive golden cross, that would be enough to then eventually break it through this major resistance. So that's what the monthly chart's telling you. But it doesn't mean you can't have short-term selling over the next couple of days to weeks. Now, a big divergence that took place over here is between Bitcoin. So I have the CME Bitcoin chart over here, the futures chart, just to line it up, because the S&P 500 futures obviously also only trades on certain days of the week, and it's closed over the weekend. Look at the big divergence. You have the S&P 500, which rallied up 8%, and Bitcoin was still down negative 5%. So what I'm looking for over here is the potential for Bitcoin to catch up to what the S&P 500 has done. So don't be surprised if you do see first an upside move in Bitcoin. Otherwise, if Bitcoin is not going to go up over here, then I do expect the S&P 500 to come back down. But since the S&P 500 is the main driver, I look at that as the first mover, and Bitcoin should follow as the second mover to the S&P 500. So here's Bitcoin support and resistance levels. Very, very easy to look at. On the weekly chart, we're using the different MAs and EMAs. We have the 21 exponential moving average, the yellow one. Each and every week, it continues to track on towards the upside. We want Bitcoin to hold up above these levels and consolidate. If you're a bull, you want it to hold up above these levels for a few more days, allowing this, or a few more weeks actually, allowing this to track on up so that it can act as support above that previous higher low that was set on the weekly chart, which is around $21,775. So watch for this as a support zone if price does come down. Resistance is still the same. We got the David and the Goliath at 25,400. That's the main level we want to clear. We're still tracking over here the fractal between 2015 with the Gaussian channel and our different EMAs. We got the 9 and 18 EMA. So the 9 is the white one, the 18 is the yellow. We're watching this very, very keenly. If it plays out the same way it did in 2015, you would expect that we'd have a massive market sell-off. If that sell-off does take place, your final line in the sand, well, at least for me personally, I don't want to see Bitcoin break these lucid SARs. The lucid SAR this week is currently coming in at 18,809. If it starts to break that, I would see this as an enormous bull trap with the potential of still going down to those extremely bearish targets of 10 to 12K. But for now, it's not really on the table. Remember, we calculated from the golden cross. So when the white crossed above the yellow on the weekly chart, the 9 above the 18, 6 weeks in 2015. It happened 6 weeks later. 1, 2, 3, 4, 5. This is now the 6th week. On the 6th week is where you had the mega sell-off. So if the fractal holds true and it's exactly the same, you would expect that continuation to the downside to take place this week. If Bitcoin can survive one more week over here, then I think that the chances are higher that you're going to start to break through this Gaussian channel and much higher prices should be seen in the future. Already a warning sign over here is using the Renko chart. The Renko chart I showed you, once it's green, it holds you in until it turns red. According to that, if you're trading the system, that is if you're trading the system, it has printed its first red candle on the daily, which means that technically you should be out of your long positions. I don't use Renko as my primary tool to trade, but I'm just updating you based off the last stream that I gave you guys on that. Okay, TED Talk shows over here, US liquidity is on the rise so far in March. You have plus minus around 100 billion of inflows. Liquidity leads to price lags in Bitcoin. So this is in line with the S&P 500, right? S&P 500 is up 8%. Bitcoin still down minus 5%. So if this is a lagging indicator, then obviously the hope is that Bitcoin creates a higher low now. And we see prices move on up. So here's the liquidity chart. You can see it is green. It's not convincing yet. We want to see it break this trend line first. We're charting it in the same way we would a normal crypto chart. All right. Very, very important. We outlined this. This is another hope for the bulls that we have a solid rejection from the zone over here on the 2-year yields. If this starts to come down, that puts a bit more upside pressure on crypto and gives bulls the chance to set in that higher low. The dollar is another thing that you want to see with a solid rejection over here. If it does get back above this box, the box is at 105. So if you see it hold above that box, then I'm putting this as the next target. I think there will be a lot of pressure on crypto to the downside, and likely it's going to make its way up all the way to 107.48. So that's what I'm watching on the 𝗕𝗍𝗃. Now, we outlined on the previous stream, watch for the sweep of liquidity, watch for the bounce off of this key level, which we circled, which was not only the mid-range, it also is the downtrending trend line. It tagged into that, and it's the 200-day moving average. We got that bounce. Then I said, watch for the next sweep of liquidity. The next sweep of liquidity was over here. We got that sweep of liquidity. So you may be wondering, well, what's next? If you're trading this from liquidity to liquidity, then this is kind of the next play that I'm looking at. I'm watching this price action very carefully from the previous wick that we had over here. We had that doji candle, price went up, and then came all the way back down. I'm looking for this to now test as resistance and possibly deviate above and reject. So the way that I've drawn it over here in this chart, that's essentially what I'm looking for. Maybe an over-under scenario, the retest into that zone from this wick over here, looking for a possible rejection, and then back down to the next liquidity, which is in the low region. So I will post this into there's the short setup. It's not triggered yet, so you need to wait for the thing to actually trigger. When it does trigger, I'll update you in the Discord group. I'm looking to take this trade on PrimeXBT. If you do want to trade traditional markets, this is probably one of the better places to do it, especially if you want to use your crypto as collateral. You can deposit USDT or Bitcoin or Ethereum. I use USDT, and there is a link in the bio below. If you want a sign-up bonus, use the promo code Kyledoops. But with that being said, you must come to promo codes over here, and you physically have to type it in. Select USDT and BTC, type in Kyledoops, and then click activate over there. Otherwise, it's not going to work. You're not going to get your deposit bonus. All right. One thing of concern to me is the VIX has been very, very low. It's contracting. The same way that I marked off over here, at these levels is where the crypto, or at least where the stock market and crypto actually made its major tops. So this is where the tops took place. Anytime that you contract into these levels, and that's kind of where we're at right now. So markets need to rally soon, and this needs to continue to contract down, and we at least need to break higher time frame structure whilst this contracts down. If we start to reject now and the VIX starts to bounce on towards the upside, then of course that's going to be pressure for all markets. And a lot of people are betting on that happening, which is why you can see over here. Oh no, what happened? Okay, cool. BTC options and open interest for expiration, as well as ETH options. Their expirations are providing one of the highest over here option expirations of the year. So everyone is expecting March to be incredibly volatile at some point within this month. Now, looking at total 3, if you are trading altcoins, keep in mind this is still a strong downtrend. We've outlined this for weeks now. Lower high, lower high, lower high, breaks back into the range. Your next hope is, if you're bull at least, is you're hoping that it holds the mid-range over here and at least consolidates within a tight range. Side note, if you do see low volatility and price with low volume and price consolidates within a tight range like this, that is usually a good sign and indicative that the market could potentially be going through that transitionary phase, which we just outlined, and potential reversals could come into play. So you'd be looking for something like that, a bit of a triangle to form, at least hold around this mid-range. If you lose that mid-range, of course, it's going to look really bad. A lot of the altcoins are going to go down to new lows. So with that being said, I also wanted to outline the LSD narrative. So liquid staking narrative. We have Shanghai now being pushed out until April, at least according to 𝗍𝗍𝗍𝗍. And he says, which gives us an even longer FOMO season for LSD protocols. Many of the protocols mentioned below have seen solid buys, but hopefully nothing of what is to come yet. A big winner has been LSD, already doing more than a 3x. So I did outline this on a previous show, a previous stream. I just wanted to give you the portfolio again, so you don't need to waste your time going through the whole tweet thread unless you have the time. If you have the time and you want to go through it, go through it. I already marked off this in a portfolio. If you want the coins, take a screenshot. These are the coins. Pause the video and just take a screenshot. Go mark these off in your own portfolio. Those are the coins that he's talking about, as well as a couple additional niche ones that I found and I think could potentially do well. Okay. With the ETH upgrade, okay, you got the new Ethereum account abstraction. EIP is going to be huge. I find this very, very interesting. This could be really, really good for mass adoption. It's not something that's going to play out right now, but I still thought it's worth mentioning. So they're looking to basically do upgrades whereby you won't require any seed phrases. There's gasless transactions. You get two-factor authenticator, face or fingerprint signing, monthly spending limits, session keys, so 0 transactions during gaming, which means that, you know, if you try to play these crypto games now, you have to, every time you make a move, it takes a fee. It uses a transaction and makes a fee. And he says wallets are going to become bank accounts without needing trust. This is a really, really big step in the right direction. If the market is going to go into a new bull run and they have this all hashed out, that could be absolutely huge. It means you don't have to memorize all these keys. You don't have to try and safe keep them. If you lose one word, basically you've lost all of your money. It solves that problem and makes the interface and user experience so much better, similar to how it is using a smartphone in today's time. Just to go on a normal app, it would be the same user experience. All right. Some key altcoins have been at support. I did outline this over the course of the weekend. I think it was on Friday or Saturday. I said it's all the same story. Look for a reaction off of the key level. If it deviates below the range low and then reclaims, that means that it's a long opportunity. If it stops below that price swing low, I hope this helps. Go through onto my Twitter. If you're not already following me, follow me. There's a link in the description below. Or type that in, Kyledoops. Make sure no funny spaces or anything. There's a lot of scammers out there. Should look like this. Exactly like that. No other spaces or anything. I dropped the whole list over there. Everything is over there. Feel free, go and look at that. I'll take you through one just as an example. Let's go to 𝗬𝗏𝗡. I know that was on the list. So what do I mean with regards to what I just said in that post? What I mean is wait for a reaction. You don't want to act too soon. What is a reaction? You might see it deviate and go below the range low. A reclaim of that is the reaction. That means you can now set your stop loss below wherever that area was that was set, the deviation. Set your stop below there, re-enter your long into the range low, and then you target up towards the upside. All the coins look the same. If you were to play it like this, then this is kind of your setup, right? You would be looking at something like that. First, take profit. Second, take profit all the way at the top of there. Let's not be too aggressive. I think that's decent enough. You're looking at, let's put up a little bit further, around a 1 to 3 risk to reward ratio, which is what you want in trading. All right. Here's the levels. Very, very simple on the daily. 200 exponential moving average, area of support, light blue one. Next one is the final line in the sand for bulls, and that's going to be the 200-day moving average, which is the dark blue one. That's currently coming in at 19,700. So if you lose this level, you're probably going all the way down to this zone over here. This will be bad. If you lose this level, it's going to be bad, especially on a closing basis. What I'm okay with seeing as if I'm looking for the bullish case is I'm fine with seeing a quick spike down and a reclaim of that zone. That would look okay to me. But if you start to close underneath these regions over here, without a shadow of a doubt, you're probably going to revisit this zone over here. Then you're back in the range. I'll show you what the range looks like now. There you go. So still the same as last week, right? We're tracking that trend line over there. Breakdown below the mid-range. You're coming down to the 0.25 level, 19,914. Lose that. You're coming all the way down to 18,142. This will be a lot of momentum. I spoke about this months ago. If you start to reject from here because of the inefficiency, what is the inefficiency? Inefficiency is when you see a really quick move towards the upside like that. That means that just as quick as price move towards the upside, it can move to the downside even quicker because it will trigger all of these stops. All the stops that have been placed over there will be triggered very, very quick. So ask yourself, psychologically, where are these guys that bought over here? where are they going to start to bail out of their positions? I think the answer is under the mid-range. Soon as you lose this level, all of these guys here are going to start to stop out. Boom, 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 boom. Creates a very, very quick sell-off, which could be an opportunity. It could be, but we need to reevaluate closer to the time. We're not there yet. Liquidation levels, 𝗕𝗏𝗃𝗧 said a while over here. Bitcoin is moving into the range between the EMA 200 weekly and the EMA 200 on the daily. We have dumped from 25,000 as explained weeks ago in my previous tweet and are nearing my mentioned 21,000 region. I think we will break down the EMA 200 on the daily due to bad economic numbers and FOMC in March. So 𝗕𝗏𝗃𝗧's relatively bearish, but what I mostly wanted to show you over here is the different liquidity pools around those different EMAs and MAs. So important, guys, it's almost the same. You got $420 billion worth of liquidity, which means that if price moves into that zone, those guys would get stopped out, right? And then on the same as on the downside over here, you got $559 billion worth of liquidity if price comes into this zone, which would act as a spring. So that's what I'm watching over there on those timeframes. Now, low timeframes for our chart, you have low volatility marked by the blue bands with the BBWP showing a contraction, meaning the next move is going to be explosive. You have the stochastic RSI is at the top and starting to cross down. You have the EMA 50, which is the red one, with the EMA 200, the blue one, starting to cross. The cross hasn't happened to the downside yet, but it looks almost inevitable. All in all, short term, I must be honest with you, this looks pretty bad. It looks more likely to break down. You have quite a clear bear flag that's forming, strong sell-off to the downside, and there's your flag, right? Consolidation underneath those EMAs coming into very, very weak support over here. I don't think that's going to be very, very strong support, this trend line. I mean, how many touch points do you have? 1 week, 2 weeks, 3 weeks. Is it really going to hold if you keep grinding into that? This is why price needs to rally very, very soon. Otherwise, you risk going all the way down. Next target is going to be $21,247 in the short term. That's this trend line or this horizontal. And then after that, you go towards that mid-range target in the 19K region and then range low, which is much, much further down. But first area of interest, I wouldn't be surprised to see a spike down to 21,247. So that's what I'm watching over there. Last but not least, Rolexes. If you have entered this competition, please go into the Discord and check if your name has been called out. I think there's a section over there which should show the user IDs which have won. You need to go look at your user ID on BitGet as well as Bybit. If you have not yet entered, I'm not sure if the giveaway is still going. If you haven't entered and you want to take the risk to enter and it's still going, I'll have to check with Run later. Then you'd need to use the links which are in the description below over here. But otherwise, guys, that is it. The sign up over here, you would still get, that's still guaranteed, the access to up to $30,000 on Bybit, and BitGet, you're getting up to $8,000. Please give the video a like, hit the bell notification, and subscribe to the channel if you haven't already. Thank you all for watching. I honestly appreciate each and every one of you. And I will see you all on the next video tomorrow. Have a stellar day and cheers for now.